Hey folks, and welcome to the Pipnotic Symposium on the 18th day of the first month, 2019. Today we are going to talk about identifying quality areas of supply and demand. And this can be done in a pretty easy way, and I'm going to show you a very simple way that will help you ensure that you get better entries in your trading. So what I normally do is I start on the bigger time frames, because essentially I need to know what is going on these big time frames. So what I'll look for is I'll look for areas of supply and demand that have been consumed, and then I use this information to help me find areas of supply and demand that were responsible for consuming the previously mentioned supply and demand. So if we have a look here, we have let's have a look at this. Here we have an area of accumulation. This accumulation was to move price lower. If we have a good close look at this, you can see that price moved down, we accumulated, and we moved down. When price left here, we were able to consume this area of demand down here. Okay, you can see that there was also something in here. Price came, tested, and this is very clear. And price came down, we accumulated orders to do what? To move price lower, just above this area. So this is very interesting. This is super important to pay attention to. So price accumulated, then it cut through. So we consumed this area of micro demand. I call it micro demand because we can't see the details of it on this time frame, but this is probably daily demand. It was tested once, twice. On the third time, price went through it. On the fourth time, price managed to trade below it. Okay, so price went through it, and then we poke through this area just down here. So this is very interesting to us. And so here, this is really important now. What I need to identify here is the area of, in this case, supply that was capable of consuming this area of demand. You can see the indicator does this very nicely. It tells us where we have this, and it is located right here. So this is the area of supply that consumed this demand. So I'm going to remove this. We're going to zoom in a little bit, and you can see that this is interesting to us because this is the area of supply that we would expect price to react at next time. And why is that so? Well, this is so because this area exhibited strength. How do we know that it was strong? Because it consumed opposing demand. So this is where you'd look to sell. Keep in mind that price is already really far down, so this would be a high risk trade because price is essentially going to look to rebalance and fill this and move up into this thin liquidity, up into the thick liquidity here. But price did react there. We bounced, we moved through it, and then we came down and did what? Well, we identified the area of demand that consumed the supply. And where is that located? Well, it's located just here, this one. So this did it. Price tested it as expected. It came back up. We came down. We accumulated, and then price managed to move below. So this area is gone. What area took this out? You can see we have a continuation pattern here which happened right on the area just above it. So move this. It's like this is a continuation pattern. Okay, price came down. This is the one that took this one out. It came down, we moved up, we went sideways, we cut through it. What area of demand took out this supply? This one did. This is a child. Okay, this is the parent. Price came up, we accumulated, we went up, we came down, and then we left. Okay, so this is the area, let me remove this one, of demand that is currently in play. This is the one that's currently holding. Okay, good. So now we have this one. Now we need to identify other areas of supply and demand within this little price structure here. So we have this area of demand, and this is demand It's not very clear demand on here because we didn't have price holding and trading above these highs here. But price did come up, we came down, we went up, we had a strong move, we had accumulation, and then price did move high. And I'm looking at this, and I must admit there is a slight degree of subjectivity involved, but this is, the subjectivity is limited to this, to the fact that we only have wicks here. Ideally I'd like to see 4 body candles above this high, but we didn't have that. Okay, so we have this one here, and price moved up here, and we moved through this. And so if we consider this for a second, I mean, this is, as we mentioned, this is gone. And so the origin of this move down is, you can see the indicator marked a little X here. This tells us this is an this is an area of supply. So it'll look like this. It'll look like this. And so price managed to poke through it, as you can see. And the area that poked through it is this one here. Okay. Price came down, it reacted as expected, it came back down and moved through it. What area of supply moved through this demand? Well, the origin of the move is up here. And you can see, the reason I say this is because price came down, it tested, and then it went down. So this tells me that this is the beginning of the sell zone. So on a smaller time frame there is going to be supply here, and this is what price reacted at. So I'm going to mark it off like this, right in the middle of the wick, like so. Okay, I'll delete this. Okay, is this still in play? No, it is not. Why? Because it has been consumed by what? By this. So we have this one here. And if you go to the quality checklist video, ask yourself the question, is this a parent or is this a child? This is a child. Where's the parent? Down here. So move this to the parent. What does that simply mean? That means that child supply and demand is not a supply and demand, it is a reaction to supply and demand, so the parent. So this was established dependent on this area of demand. This is independently established, so it's not dependent on anything else. So this is the area that we would expect price to react to, and it has done quite a few times. Okay, good. Also notice that we had this area of child supply that we marked off. Demand, sorry, it's gone. What area moved through it? This one here. And I choose this one because this area was established, and as I did previously, where's the deepest retracement? The deepest retracement is to here. This is telling us where the edge of the sell zone is. And so you don't want to sell for a price any cheaper than the high of this little pullback right here. Okay, so this is the beginning of the sell zone, and it goes on up to the 160, 152-ish area. Okay, price reacted there, and now we're starting to move lower. I'm expecting price to drift through this because this has been tested once, twice, 3 times. In each test, you notice that the wick goes a little bit deeper into it. So I'm expecting price to move through that. And so, okay, I've done my analysis. Now I know what is going on the monthly chart. So now I go to the weekly chart and I do the exact same thing. I'll leave my rectangles there. So now we have a look and we do the same thing over. Okay, good. So right now we can see that, okay, we had an area of demand here, and this is an area of demand. Why? Because, let me zoom out, I'm looking for prices in the market where price bounced from. So we had this move, the origin of the move is here. Okay, so this is where price is likely to react in the future. We had a really nice reaction, but notice that price went pretty far into it, almost, I'd say maybe 3/4 of the way through this area of demand. Okay, and so what I'll do is I'll mark off the deepest retracement to the downside, which is here. I'm going to mark off the deepest retracement to the upside here. And I'm going to look at these as the beginning of the sell zone, and here we have the beginning of the buy zone. Okay, so if you look, you'll notice that the bottom of this area of accumulation is a little bit lower, so that's also a pullback and a test. Okay, and so if we have a look here, it's a little bit messy with this data, but you can see, let's say we won't pay attention to this candle because this is just a gap. It's a little bit kind of ugly, the data. But if you have a look and you say, the green candle that left this area, let's not focus on this one, is this one here. Okay, so attach this to the body, the highest body to the low of the accumulation, which is here. This is where we expect price to react at in the future. Price is telling us the edge of the buy zone is here. Price poked into the area. Let me delete this, and now price is drifting away from here. Okay, so this is still a strong area. Price did manage to hold for the time being. So we have this one, so we have to do the same thing again. We have this going on up here. Okay, so we have an area of supply. So where is supply here? We have the area of supply just here. So we have a really nice accumulation here. The beginning of the sell zone is here. It's once, twice, 3 times, so it went a little bit deeper. And finally price went up and moved through this here. So now you say, okay, what area of demand consumed this supply? And when you're looking for this, let me just make a very clear point. So you have price it's going up like this, and it's going sideways and then down, then sideways, then down, like so. Okay, so when price pulls back like this, I mean, we're looking for the highs, but know that the closer you come to a peak here, to a swing high here, and a swing low, the higher the probability that a trade will work. So while yes, we did have this move did originate from this area of demand here, but this is a very low probability area to buy at because we're really close to the high. Okay, and we're also will be buying while price is in weekly demand, so it's a really bad idea to start buying there. Okay, so what you could do is you could wait for these areas to be consumed then by the supply that took this out. Okay, and so we consider for a second, if we consider this one for a second, let me zoom in. Here we have a child, a parent. There's a lot of these continuation patterns cascaded in here. This one is gone. Price reacted, went through it. So the edge of the buy zone, oops, where are you? For this area is here. So this is the most expensive price you'd want to pay if you're buying. Price came through, we moved through that area, and we poked into the parent, which is just here. So, and here we have, I mean, this is pretty messy down here. So we would expect price to move through this pretty easily. Until we get down to here, this is a nice clear release. The beginning of the buy zone is here at the lows, and so anywhere from in here would be a pretty good reason to start to buy down here. But notice that even though that this is a low probability trade, notice that the area of supply that took this out is right here. We have the white candles here telling us where they are. This is where price reacted once. We came down, we moved down and through, and we're having a second test. This is the area of monthly supply that price reacted at, and so this area held. Okay, so we have weekly supply that is currently driving price, and there's nothing really in here that's going to stop price. So price will probably continue falling until it finds some fresh, untainted pools of liquidity below price to support it and essentially drive it higher from here. Okay, so okay, let me take another chart. Let me clear this off, and then we'll do the same with another pair. Okay, yeah, now we've moved into the jungle. We're really far into the jungle, and the internet here is really bad. So every time I click on a time frame to change the time frame, my terminal is calling the Pipnotic service to check for updates, and it's just a really slow process. So I apologize for these kind of longer waits every time I'm changing time frames. Okay, Okay, so let's find something else. Let's find the Aussie dollar, for example, and we'll do the same thing there. So whenever you look at a currency pair, you have to ask yourself the question, what is currently driving price? Okay, and so let's have a look. Let's have a look at what we have. So I really like this right here. Is very interesting to me because we had price rally, we had price come down, we poked into this here, then price raced north. Look, after price left here, when price left here, it moved above this area of supply. And I know this is supply because price tested it and reacted at it. Okay, and when price left here, we moved through this child and this parent and all the way down to this one here. Okay, so this is gone. What area took this out? This one here, just here. Is this a parent or is this a child? This is a child, which means it is not demand. This is a reaction to demand. The demand is here. Okay, and you can see that very clearly. Price raced up, we came down, we fed into this area of demand, poof, and then it left like a shotgun. Okay, the next time price came down, it cut straight through it. Okay, and so notice now we have few things going on here. When price left, we had this area here. This is kind of the lowest price, the most expensive price that you'd want to pay for this. This is price pulling back. It's kind of pulling the slingshot back before it releases, and the price was released from the low of this, which is telling us that we have a bullish liquidity below the lows here. So in other words, there are people that are willing to buy when price comes towards these lows here. Price came back, we moved higher, we accumulated, nice, we came down and we accumulated, then we cut through. So without going on the smaller time frames, initially, we'll just say that we have something in here. We don't know what it is, but we can see that we have something there because price pulled back and left. The second time price pulled back and then it went down, accumulated and went down. So now this one is gone. Then you ask yourself the question, what price consumed this demand? Sorry, what area of supply consumed this demand? This one did, right here. Okay, so we have this little one just here. Okay, so this one is fresh, it's untested. We managed to consume whatever is in here. We'll mark this off actually, and we'll have a look and we'll see what's in there. So let's go to the weekly chart and see if we get a little bit more clarity. Yeah, you can see here it is. The price went up, we came down, we rallied, accumulated, rallied, tested, left. So here we have a continuation pattern. Okay, tested once. We know this is demand because when price left, it pulled back and left. This is not demand. This is a child. This is a parent. This is a reaction to demand, which is here. Price comes down almost. We test the child. We move through the child. We test the parent. Price leaves. It moves up, accumulates, moves higher, then it moves down. The price comes down. We accumulate. We move down, we test the edge of accumulation, and then we move away from there. What does that tell us? Is this supply? The answer to that is no, it is not supply. Where's the supply? The supply is right here. Okay, so on the monthly chart, we've thought that it was here, but on the weekly chart, we're able to get clarity, and so now we know that actually it's not that area of weekly supply. It is, monthly supply, it's the weekly supply. So we'll remove this monthly, we'll delete it, and so now we know that when price comes up to the 8900 area that we want to be positioning ourselves to start selling. Okay, price might have a bit of a tough time moving here, but technically speaking, this is supply and this is a reaction to supply. We actually have a couple here. We have the parent, we have a child, price left, we move back up into it, and then we leave. So we actually have two children and the parent just above. And I noticed that whenever I put my orders in areas like this one here, price 99.9% of the time will move deep into it before it finds the liquidity required to continue moving lower. And so I am going to put my entry as high up into this pullback as possible, because this is telling me that the edge of the sell zone is about right there. And if we zoom in, I'll zoom in really close, right here. So you can see that the edge of the sell zone is right here. So we had the accumulation, price left, we moved up to the edge of demand supply, and then it left, accumulated, and then it dumped. So this looks like a pretty good area, but I would be more comfortable selling up here at the highs. Okay, I'm going to move this all the way to the close like that. Zoom out. Cool. Good. So what do we have on this time frame? Well, apart from these ones, let me disable all of these areas of supply and demand, so we have to do the work ourselves. Cool. So we have that lovely area. We have this. Okay, and I'm going to actually draw the rectangle to the high of the pullback, because this is where price found liquidity, enough liquidity to overwhelm the lower side of the market as price left here. We didn't have a super delicious move down, but price did leave. Okay, so price managed to leave, come up, come down, accumulate, and then leave. And so, same as before, mark the deepest retracement. This is the beginning of the sell zone. Okay, we came there once, price came up to it, and we moved deeper into it. We approached this, the child, the parent. As a matter of fact, we have the parent here. Child poked into it, left, price came up to the child. We had some pullback, so we had some micro supply here. Price came up through it, and here we moved through it. So what area? You know what? If we go to a smaller time frame, we're gonna have a look inside here and see what's going on inside this candle here. So we'll go to the daily chart. There it is, right there, daily supply, right there. Okay, we'll go left and we'll see, you can see this area, this daily supply that we just identified is gone, and what area of valid demand removed it? Let's go and look. This one did, right here. Okay, so this one is gone. This is where we expect price to bounce. Price left, poked into this. This is the upper edge of monthly. I don't even know if it's supply demand. What is this? Oh, this is the one that's gone. So let's not focus on that. Went up here, came back down, tested the area once, went a little bit deeper. We have some really nice currency strength divergence on the currency strength histogram Pipnotic. Price came down, then we left, we moved through it. So what area of supply consumed this demand? Look for the pullbacks. We have one there. So this one is gone. You got something like this. Oops. You got something like this, which is gone. What area cut through it? The precise area that cut through it is this one. When price left this first continuation accumulation candle after the green one, it cut through it. So it left from here. If you want to get super meticulous about it, then we would go to this one here. So this is the next one. We should be on the smaller time frames, but we'll just do this. Okay. So price left. We tested that area. It's strong. Price came back down. We move through it. So now we take this and we go like this. We'll just mark off the edge. And we need to go into the small time frames. Go to the 4 hour maybe. Here it is, and you can see very clearly that this is the area of supply that left. Okay, this is a really nice one. Price formed this top, we came down, accumulated, pulled, went down, came back up, tested the edge of there, and then left. So we have the chart, we have the parent, so we could do something like this, like so. Mark off the high of the retracement, which is about, come on, like that, just here, and then price left. Price just managed to come back to the lows, so we'll mark off the lows and see, you know, let's go to the daily again. We'll see where we are. Well, price has not been back there since, so we have a nice area in here should price return back to here, which it will one day, but it's pretty far away from price. Okay, and then now, because price is moving lower, you want to find stuff like this. This is gone. Okay, this is gone. It was tested once, twice, it's gone. What area took it out? This one did. You see here we had this price came down, it closed, it came down, it went up a tiny bit and then down. That's micro supply. So go like that. The high of the wick, this is where price tested. Come back down, have a look. Price left. Okay, we've got to find areas of opposing demand that have been consumed. This is super important. If we don't have those, then we're not capable of identifying areas that have been taken out. So we need opposing supply and demand. So here you can see we have a nice area here. We have this one. I like this. Price came down, it went up, accumulated, went up, it pulled back, and it left. So the beginning of the buy zone is there, which is overlaps nicely with this area of demand. So I'll delete this line. Price tested it, and it's gone. What area took it out? Well, the area it took it out is this one here. So I'll delete that, and I'll mark that off. What area left? This one did here. Oh, okay. This one left. Go back. Are you accumulation candle? Kind of. Is your body this one within range of the previous? Kind of. So you see how these ones here, these are all bunched together. We have small continuation patterns in test. This is all micro supply and demand playing out. So we'll go like that. Okay. So this is where price reacted to. This is a bit of a dodgy one because price is in agreement for a long period of time. So this is just an accumulation of what? Of orders to go short. Price left, we tested, and now we're kind of moving sideways and doing this. Okay, so this is what we have here. We have this above price has been tested. Price left really nicely. So now we want to find, we want to look at this. I want to look where the low of price here, and we want to scroll. You know what, I'm going to change the color so we can see it, make it pink or something, and now we'll scroll back and see where that went. Okay, so we came back to this pullback. Price went up, we tested, this is the edge of the area, and just below that we have this just here. Okay, so we have this. You can see how price went up, we came down, we pulled back, we went up, accumulated, we went up, accumulated. So this is there's a lot of accumulation here, and then price popped up. We kind of found the edge of the buy zone, but just here we have demand, micro demand, and this took out this micro supply. So this one did it, kind of sat on the edge. I'll try and do that. It's difficult to see, but this one did it here. Like that. Okay, so we have to find all of these little micro areas of supply and demand, and if there's not clarity on the time frame that you're looking at, then go to a smaller time frame, but don't go to a time frame that's too small without first having referenced these bigger time frames. Because yeah, I mean, a lot of these trades are taken on the 1 hour chart. Sometimes I'll even refine the entry and go down to the 5-minute chart, but I'm not going to the 5-minute chart and doing my entire analysis on the 5-minute or the 15-minute or even the 1 hour or even the 4-hour chart. Okay, I'm not doing that. I'm always referencing what's going on these bigger time frames. So if we go all the way to the left, we know that price returned to this area and we had an incredible reaction. Okay, so price really found some buyers at the 67.86 area. And so if price reacted like that on the first test, how do you think it would react on a following test? And so here we have to do the same thing over, but on a smaller time frame, and find out where these areas were consumed. So we have this area here. This area here was consumed by what? By this one. This area was consumed by what? By this one here. So this is maybe an interesting area to keep an eye on in the future, and it's below where price has been historically. If you pay attention to this, we'll zoom out a little bit, notice that the wicks have already been back to here. What does that mean? That means go to the smaller time frame and have a closer look. So we'll do that. Let's go to the 4-hour chart and see if we can find what's going on there. Okay, so you see the test. You see price came down, we rallied, and we got to do this whole thing over. Now I'm mindful of what we can see, what we could see on the other time frame. Okay, so we have to find all of these areas that we noticed. So you see, okay, here this is getting pretty micro, but notice that we have this. See how price accumulated? We came down and moved below these lows. We moved really far into this one here, and price moved through it. The origin of this move is down here. Okay, so we have, so this one's gone. We have the beginning of the buy zone here. We have accumulation here. So I think that you could have a look to start to buy at the lows of where all of this accumulation is going on. So around, oops, so around here. So essentially we could look for the buy zone to be located around here. So here and below. So this is the 63.94 area. Okay, and if you look here, this is pretty interesting because price reacted to this very nicely. Scroll, 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 scroll. Where are we? Okay, let me go like this. This is where price came to. It's incredible how well this works. And if you notice here, I mean, we had something in here that was holding price. I'm not going to go to the smaller time frames to look, but I can see that something's going on in this candle. What is it? I don't know, but it's going to be micro demand. Okay, that's in there. It's gone. What area did it? Well, look just above it. Where's the wick? The wick is right there. You see? The wick is right there. So this is the edge of the area that consumed this micro demand. So we can't see the details in here either. So we'll just go like that, just for the sake of example. Okay, this one's gone. Delete it. And then you can see, well, this one's gone. Okay. What area did that? We have a wick here. We also have a wick below here. What does that mean? Well, that means we probably have some areas in here that are worth looking at. So we have, let's just box this whole area off like that. Okay, now this one's gone. So what area of supply took this one out? We have this one here. This is the one that did it. Okay, this is the one that did it. So price came down, accumulated for a long period of time. We moved, we accumulated, we moved, we came back to the upper edge of this accumulation. We sold off and we moved through all of this. So what area was responsible for consuming this demand? So if you look at the origin of this move here, excuse me, so we have, it's from here all the way down to here. So we have this move here. Okay, we moved through here, we've taken this out. So you have to now do the same thing on the smaller time frames and identify the micro demand that was in here. What area of supply took this one out? This one has been tested, it's almost gone. Price moved through it. You can see now that we have child, parent. Okay, is the parent still there? No, it's not, it's gone. What was the candle that caused price to move through it? You can see these wicks are just sticking out below. So the origin is here. This accumulation here. Is this one valid? No. What area of demand took it out? We have this area just here. Is this a parent or is this a child? It's a child. The parent is here. So this is where we would expect price to bounce next time. Price hasn't been back there since. So keep your eye on the 70.18 area on the Aussie US dollar and see what price manages to do once it comes back there. And not all of these will hold. If you've seen a lot of them get taken out. When that happens, just find the area of opposing supply and demand that is responsible for taking it out. And when you found that, then you found the high probability areas of supply and demand. Okay? And so it's not about going and saying okay, here price left here pretty well. That's great. We got a nice area there. Let me use this here. Price left here really strong. That's great. We also did this. That's great. Price left here. That's great. I mean, price really went up and then came down again. That's nice. It's not that easy. If it were that easy, everyone would be making lots of money. But it's not like that. So you have to look for the pullbacks. We have this one. Price comes down, it pulls back, then it goes. Okay, so this is telling you where the edge of a sell zone is for this area of supply. But look at these clues. We have a wick, we have another wick. What does that mean? That means that maybe the beginning of the sell zone should be marked off at the highs here. Okay, is this one still valid? No, it isn't. What area of demand pulled it out? If you look really closely, the candle that left pulled back like a slingshot to this level here. Okay, so this is the beginning of the buy zone, and here we have the area of demand. Okay, price came down, it's no longer valid. The origin of the move, this is the move. The origin of the move, this is the origin that caused price to move through this area, is up here. Sell when price comes up here. Has it been taken out? Yes, it has. What area took it out? This one did here. Okay. The origin of the move that took it out. This is the move. This is the origin. Is this area, was it taken out? It was. What area took it out? This one did. Price has not been back there yet. So maybe look to the 110.50-ish area for a potential reaction. And notice that we have a little wick right there. Okay, pay attention to these details. If you look at a price chart, people think, oh, god damn it, man, this stuff is just random. I don't get it. I mean, look at prices all over the place. It's not making sense at all. You know what? It makes a lot of sense. And if you train your eye to focus on these little tiny details that are just hidden, then you'll get it. Then you'll really get it. I remember once when I was doing malware reversing, the guy that I would work with, a Finnish guy, absolute sweetheart. He would always say to me, Sareed, God is in the details. He said, focus on the details. And so you'd be looking at a piece of malware, which it's typically written in assembler. I mean, you'd look at a piece of code, and it was so complex, but there would be tiny details that once understood would completely solve the whole challenge. Okay, and this is the same way. There are tiny details, and if you learn to pay attention to these tiny details, once you've trained your eye to find those, well, then everything changes, and then you start to put your orders in at levels where you're going to see these really nice reactions. Good. Well, I'll leave it at that. I hope this helped to answer some of the questions that some of you guys had. I know that there was in some of the comments on these YouTube videos, there was I promised to make a video that would cover just this, and I hope this helps address maybe some of the questions that you had. And essentially, it's about liquidity distribution. You have liquidity in the market moving up and down. You can't see the liquidity, but you can see how price reacts when it bumps into these pools of liquidity. And this is what you have to train your eye to see. You can't really make decisions based on these candles, but you can pay attention to how these candles react and what they look like, kind of how they're painted. And this is telling you what's happening behind the scenes. I mean, we can only see this. This is all we can see, and we have to make decisions based on what we can see. We can't see where the liquidity is because, I mean, it's not visible. Of course, some people have access to order books, but it's such a decentralized market. It's very difficult to be able to use this information accurately. But if you learn to train yourself, to focus on how price reacts on this invisible stuff, well, then I think you'll be doing much better. Right, I'll leave it at that. Thanks for watching. If you have any questions, please type them in the bottom. Thanks again.